Pablo Escobar was making $420 million a week at his peak. Cash, physical bills, and he had so much of it piled in warehouses and buried in Colombian fields that rats were literally eating through $2.1 billion of it every year. His brother Roberto, who ran the books, wrote that they just accepted this, wrote it off. $2.1 billion. A line item, gone to rodents. And I keep thinking about that image because it points at the real problem, not will the police catch you. The problem is, what do you do with the money? That's the thing nobody really explains. If you rob a bank, you have cash. But the second you try to buy a house, open a business, or just deposit it, someone asks where it came from. The government tracks big deposits. Banks are required by law to file reports on transactions over $10,000. So you've got money you can't spend without explaining it. And explaining it means going to prison. That's the actual problem money laundering solves, not getting the money spending it. Okay, so the name, money laundering. It comes from the idea that you're washing dirty money until it comes out clean, untraceable, legal on paper. And the mechanics of how you do that, they're genuinely fascinating in a deeply uncomfortable way, because the system that enables it is the same system your paycheck flows through. The first step is called placement. You have a pile of illegal cash, and you need to get it into the financial system without triggering an alarm. The obvious move is depositing it in a bank, but most banks have monitoring systems and those $10,000 reporting rules. So what do? You break it up.
There's a technique called Smurfing, named after the cartoon, yes, completely seriously, where you split large amounts into smaller deposits under the reporting threshold. You use multiple people, multiple banks, multiple days. $9,400 here, $8,700 there, $9,900 somewhere else. Nobody files a report. The money quietly enters the system. But there's an older, blunter method. You own a cash business, a laundromat, a restaurant, a car wash. These businesses legitimately handle a lot of cash, and nobody bats an eye at cash revenue because it's hard to verify. You take your illegal cash, you mix it with your real revenue, inflate your reported income, pay taxes on it, and suddenly that money has a receipt. It came from the restaurant, it's income. Here's the tax return. This is what Breaking Bad got exactly right with the car wash. Walt wasn't just hiding money, he was creating a documented source for it. The IRS doesn't care if your money is dirty. They care if you can account for where it came from. The car wash gave him that story. Now here's where it gets more sophisticated. Because placement is the risky part. You're physically handling cash, moving it around, using real people. The second step is called layering, and this is where it gets almost abstract. You take your now deposited money and you move it through a series of transactions designed to make it impossible to trace. Wire transfers between shell companies in different countries. A company in Panama pays a company in Cyprus, which pays a company in Seychelles, which pays you for consulting services. Each hop adds distance between the original crime and the money in your account. Shell companies are the engine here. You set one up in Delaware or Wyoming, states where you don't have to disclose who actually owns the company. Or you use an offshore jurisdiction where ownership records are secret. The Panama Papers in 2016 exposed exactly this. A Panamanian law firm called Mossack Fonseca had created thousands of these anonymous structures for politicians, oligarchs, and criminals. World leaders, prime ministers. Their money was moving through companies that technically existed, but had no employees, no offices, no actual function, just a name on a document in a filing cabinet somewhere. The whole thing works because international financial systems are fragmented. Banks in different countries don't automatically share information. Legal structures in one country don't have to be transparent to another. And the people who design these structures are actual lawyers, expensive ones, with offices in glass buildings. Which brings me to HSBC, and this part still bothers me. In 2012, HSBC, one of the largest banks in the world, admitted that it had helped El Chapo's Sinaloa cartel launder at least $881 million through its US operations. The cartel wasn't being subtle. They designed special boxes, custom-built, that fit exactly through HSBC's teller windows in Mexico, so they could slide huge amounts of cash across the counter without holding up the line. Someone measured those windows, someone made boxes, and it worked for years. The fine HSBC paid was $1.92 billion, which sounds enormous until you know it was roughly 5 weeks of profit for the bank. No executives went to prison. The US Justice Department decided not to indict the bank because, and this is actually what they argued, the bank was too big. Prosecuting it might destabilize the financial system. So, if you are a cartel and you launder $881 million through a major international bank, the bank pays a fine and keeps operating. If you are a street-level dealer caught with $20,000 in cash, you face forfeiture and federal charges. I'm not saying that to be glib. I'm saying the system is genuinely inconsistent about who it punishes, and that inconsistency is structural, not accidental. The third phase is called integration. Your money is now clean. It's been placed, layered, and now it re-enters the legitimate economy as a normal transaction. You buy real estate, you invest, you bring it home as business income or loan repayment. If the layering was thorough enough, there's no paper trail connecting this money to the original crime. It's just yours. Real estate is how a lot of this ends up working at the high end. All cash purchases of luxury apartments in Manhattan, Miami, London. The buyer is often a shell company, so the beneficial owner, the actual human, is invisible. The National Association of Realtors in the US was, until recently, specifically exempt from anti-money laundering rules that banks had to follow. An industry that moves trillions of dollars annually didn't have to ask where the money came from. That changed partially in 2024, but only partially. The UN estimates somewhere between $800 billion and $2 trillion gets laundered globally every year. The range is that wide because by definition, it's hard to measure. What we know is that less than 1% of it gets seized, which means 99% works. And here's the thing that keeps nagging at me. This isn't some parallel shadow economy running alongside the real one. It's the same economy. The law firm that sets up your shell company is the same kind of firm that handles corporate mergers. The bank that processes your suspicious wire transfer handles your mortgage too. The real estate agent who sells a $4 million apartment to an anonymous LLC might also sell you a starter home. The infrastructure for laundering money is the infrastructure for moving money, full stop. And the line between them is mostly paperwork. Escobar's problem, $2.1 billion a year eaten by rats, was a storage problem. He had more cash than he could move through the system fast enough. He needed more banks, more fronts, more lawyers. At a certain scale, the money itself becomes the liability. The people who solved that problem most elegantly didn't do it with guns. They did it with incorporation documents and correspondent banking relationships and offshore trusts. They wore suits. Some of them still do. That's the part the movies usually skip.